Simon Brown is the founder and director of Just One Lap. He's our guest this evening in the studio. We're talking about ETNs and ETFs. Before we went to the break, Simon, you started talking about commodities and emerging markets and that. I think it was also on Monday night that Peter Major from Cadiz was saying he's a little bit concerned about A, commodities. He thinks they may start coming off. And B, emerging markets. I think he was saying, that if there is a little bit of a hiccup with China and India, emerging markets as a whole could see interest in them being pulled out. So, although I understand what you're talking about when you say you need to have exposure to these sort of asset classes or possible asset classes, I'm just still a little bit nervous.
And I think perhaps the key thing we should take from that is almost step back. You can't afford to be nervous about your investments. This is something you're going to hold for decades, and if they make you sleep poorly every night, you're going to have a horrid 10 or 20 years. You need to always make sure that whatever your investment allocation and stuff is, it needs to be something that makes you comfortable. It needs to be something that you can go to sleep at night, not worry about it. You don't have to wake up first thing in the morning and haul out your phone before you even made coffee and check where prices were last night. That's not about quality of life. So, and I mean, is there stuff to be nervous about right now? I mean, you didn't even bring Greece into it. I mean, maybe because Greece is just the easy one these days to pick on. I mean, there are issues out there, and I certainly think in terms of commodities, prices have flown. We saw copper at 10,000 a ton. That just seemed too high. Oil at 120, it's got a lot of risk premium in it, and I don't think that North Africa, Middle East risk premium is completely justified, and I think that's going to bleed out. So in the shorter term, and let's say for the rest of 2011, for the run of this year, absolutely we might see a pullback in that. But if we step back and look at the broader picture, and India and China would play into that. China's not going to go into negative growth, but if they drop down to 6 or 7 from their 8s and 10s, that's fairly significant in that space.
Yeah, okay.
We could perhaps see some of that in Greece into the equation, people, markets, investors globally wanting safe haven status, and that certainly isn't emerging markets, it's not us. So the rest of this year could be a little bit rocky, absolutely it could. But again, it comes back to having those assets allocated and then standing back and not trying to exactly time the market. Timing the market's immensely difficult. Investing is more about being in the market, being in there for considerable periods of time. The commodity bull run, Standard & Charter put out a report last year. They said it's the 30-year cycle that we're in, and it started around 2000. So we're in the sort of, still in the first half of it. Even if they're wrong by a decade, we've still got some time to run there. We might see some softness. Now, someone's going to say, well, that's brilliant. Let's sell when it's at the top and it's going to come back down and we'll get back in and we're going to be so rich by the weekend. If it was that easy, we would all be driving Ferraris. Typically, you sell close to the bottom and you buy close to the top and you mess up the timing. Mm-hmm. What you might want to do is if you've got, you're thinking, oil looks good, say to yourself, look at the oil price, see where it's come from. Say, hang on, it's done a huge run since the crisis. It was down at 30. Now it's at 120. Maybe we should actually wait for some weakness, wait for some pulling back in these, and then start deploying cash into it. In other words, we don't have to respond today. We're so scared of missing out. It's like, if we don't do it today, there's never another opportunity. No, there's tomorrow and the day after and next month and next year. And the critical part, and I come back to it, is being able to sleep easy at night. If your investments are keeping you awake, then you might be rich, but you're too stressed to enjoy it.
Are you invested in these asset classes?
I don't have direct commodity exposure. I have indirect commodity exposure via BHP Billiton is the easiest, a global player in the commodity space. And the reason why I like that is because then I get one of the smartest team of people in the world effectively running my own fund for me. In other words, they run Billiton, which I own a slice of. It might be a small slice, but it's my slice. And they go out there and they say potash is the new exciting thing, and they try and fail to buy a potash company.
I was going to say, the problem is you can have the brightest bunch, but if they're being battered away by Canada and Australia and all the rest of it, they can't do anything. But they can only trade if they can get stuff out of the ground.
If they can get the assets. But they also they know that they didn't get the potash, but they have some potash exposure, and they'll try and come at it from other angles and may or may not succeed. But in essence, I've employed them almost in a sense as asset managers in that commodity space for me. Coal is very exciting, iron ore, so they're very big in that in Australia, and they therefore manage it. I haven't gone into individuals simply because I look at them, and I mean, you know, the gold story, the one I would like most probably is palladium. And then I look at myself and I say, you know what, palladium's been a great story, but to me it's too single asset. And I'm not a favor. I'm a big fan of diversified. That's why I have a big chunk of BHP Billiton in my portfolio, and that gives me my exposure. As soon as we start drilling down to individual commodities and saying we should have coal and palladium but not silver and copper, now we're really needing to be smart, way smart. We're looking at single assets that we've got to get right, and there's so much we've got to get right about it. You buy a Billiton and those guys will run it for you and failed at potash, but hey, it was a great idea.
So I mean, when you're going into these things, you're almost, specifically the ETNs, you're almost becoming a sort of futures buyer to an extent.
Yeah. And you really are narrowing down. I mean, before the break, we were talking about 5%, and you're betting 5% of your wealth, of your assets, into a individual commodity. And I mean, how much can a person watching this show who doesn't have this, if it's your full-time job, if studying coal is all you do, or oil or something, sure, you know that market. Me, you, and the listeners out there, we kind of know oil's a big story, but the nuances of it
really only
are
affects us at the petrol pump, really.
Exactly, and that's why you own Sasol, because you've got a motor car and you've got an inverse. The Africa one's a different story. I like Africa. I look at Africa as, we've got India, we've got China, we've got Africa. It's 1 billion people. Okay, it's 53 countries, which makes some serious challenges in that space. A tar road to the border and then a dirt road on the other side doesn't help the story. Yeah. But I very much like the idea of getting exposure into Africa, and then it's, well, how do I do this? I can buy ShopRite. I can buy MTN. Yes, but I want more direct into Africa, and then the African ETN does stand up and say, right, pick me. And that's, you diversify, you narrowed it down to a continent, but heck, it's 1 billion people, it's 173 stocks, it's 29 countries, it's not just palladium.
I was quite a few years ago, I was on a cruise, and there was a guy on there, excuse me, who was a futures broker on the Chicago Exchange. Mm-hmm. And he had his business manager with him. And these guys would get up at whatever time of the day or night it was where Chicago was opening and go and take their positions. And I just thought to myself, guy, you're on holiday. And I vowed then I would never get into an investment where I was bound by that investment as opposed to the investment is earning me money. Look, it may be earning them money, but I do not want to get up at 2 in the morning and go and check a computer.
It comes to the point. So they might have been the richest people on the boat, but heck, they were the ones getting up at 2 in the morning when everyone else was going to bed at 2 because there was discos and the like. Exactly. You don't want to be a slave to your investments. I a lot of people come up to, I want to be a day trader and stuff. Well, okay, so you want to be a day trader. And can you make good money? Sure, I define good money. Yeah, you can make a good living from it. But you know what? You're going to be working 10, 12 hours a day, and they're going to be the hardest 10, 12 hours of your day. And your next holiday you don't get holidays. Yes, you might go to Kruger with the family, and while they're watching lions, you're watching screens and the like. And it comes back to who's in charge. As you said, is it you or is it your investments? And there is no point in having your investments in charge. And yes, maybe we're a little bit richer, but it comes back to quality at life. We don't want to mess up our life, so when we get to the end, we got a big pile of cash, but we never had time to enjoy it because we were so busy staring at screens. And that's always my thinking. We need to keep investing as simple as possible, as painless as possible, and we need to have it so that you can check the paper, you can check your portfolio once a quarter. I know a guy down in George, he looks at his portfolio once a year. 1st of January, hauls it up, has a look, says, ooh, doing bad, sell that one, buy that one, done, come back in a year. That's what you want to be looking for.
In these 2 particular asset classes, is there anything that you are looking at the moment as an ETN or an ETF and going, I like that?
The Africa one.
Africa?
Africa, without a doubt. We've touched on that. I think it's a great proposition. And look, not short term, 5 years, 10 years, 15 years. Africa is one of the areas of the future, much as India is and China and Africa's there as well. I'm very, very bullish on Africa. There's some new ones that have come out from ABSA which are multi-asset class. There's two. There's a protect and a grow. And what they do is, instead of you having to decide what percentage in cash, what percentage in equities, they do that allocation for you. So the growth one has a large chunk of equities and a small chunk of cash and debt, and the protect has a lot more bonds, which are boring but stable, and a lot less equity. First time we've had multi-asset class in that space, and I think it's a great innovation. I think we're going to see a lot more coming through from that. You can do it with ETFs already. You can go and buy yourself a Satrix 40, and then you can go and buy the RMB inflation-linked one, and then you can go and so you can construct this yourself. But now you're getting it in one basket, click, click, being done for you. And I'm a big fan of lazy investing. So Africa is certainly on my shopping list, and I like I do it for myself, but I think for the majority of people out there, it's an interesting way of getting multi-assets in one basket. Nice and easy.
You will get the person who will turn around though and say, if you're looking at A, commodities, and B, Africa, all you need is one individual standing up and saying, we are going to nationalize the mines, and commodities and Africa goes straight down.
No, absolutely. And commodities don't move, because commodities are a global asset. And in fact, if anything, commodities might go up. I mean,
gold, people will probably dive into gold.
Dive into it because they're going to say, whoa, hang on, there's going to be less gold coming out of South Africa. It's going to create a scarcity. Your South African mines and your pure South African plays, Implats, they got some Zimbabwe. Oh, okay, they got some Zimbabwe. Anglo-Plat, your pure South African mines are going to be really hit. And again, it comes back to BHP Billiton, global play. Do they have South African assets? Yes. Are they a significant part of Billiton? Not at all. Australia, in fact, Billiton got hit when Australia was talking about super taxes on their mining assets. Billiton suddenly got hit in that space there. And again, it comes back to that diversification. I like to diversify my portfolio. I like shares in my portfolio that I diversified. MTN over Vodacom, because MTN's in 21 countries, Vodacom's in South Africa, and then Swaziland and Lesotho and a few other small ones. I like that diversification, so that one individual doesn't destroy my portfolio.
Diversify and make sure you're a lazy investor.
Lazy investor who sleeps well at night.